3 days of breakouts is one of my favorite trade setups to look for because of how simple it is to identify and how few characteristics it really has. So let's get into what it takes to identify, characterize, and actually execute one of these trades. So what is 3 days of breakouts, and what am I actually looking for to identify this style of trade? Essentially, what we're finding is overextended markets that have been moving unidirectionally for multiple days, 3, 4, 5, sometimes they are extended up to like 8 or 9 days in one direction. And those are building order flow at the other end of a range. For example, if a market is moving in the long direction, breaking out to the upside, they're building order flow at the other end of the previous day's low for the market to go back and grab the money. Sometimes it'll only pull back to the breakout level, still going back for those higher level longs being triggered in up high, stopping them out and doing those types of things. But these are great trades because usually those attempts to go back for the cash are very explosive and very fast, and that is why they're so great to be a part of, because you don't have to be in the trade for very long. You can be in for maybe an hour, 2 hours, maybe even less time than that, and you get far more for the amount of time that you're in the market compared to this choppy back and forth movement that you would normally get. So to consider something a breakout, does it need to close in breakout? For a breakout to occur, sure, yes, a breakout day closes outside of the range. But regardless of whether it closes outside of the range or if it closes on the inside of the range, and by closing on the inside of the outside of the range, I'm referring to the previous day's high and the previous day's low. So in this case, notice how it broke out a previous day's low and then closed back up on the inside of that range. This still triggered in one side of the market without stopping those people out at the other side of the market, so the previous day's high. So shorts are getting triggered in here. They're not being stopped out by the way that this market has closed. They're being triggered in again on this day without stopping them out at the other side of the range, and then doing it again over here on that third day, triggering in the shorts without stopping them out at the other side of the range. So again, this is building money at the other end of that range for the market to explosively go back to and grab for the money. So on this third day, it touches down, triggers in those shorts again, kind of just pitter-pattering its way down before going back for the other side. But the big question, does it need to close outside of the range? No, it does not, because this is still accomplishing the goal of triggering in one side of the market without stopping out those people at the other end of the range, which is, from the previous slide, I just explained why this trade works so well. So what is an extended run? We're getting some of those big questions out of the way first, right at the beginning, before we get really into detail with everything else. So what is an extended run? 4 days or more breakouts, 3 days of breakout is the signal. 4 days or more, we can consider an extended run, maybe a strong trend in one direction. You could have a trending week, something along those lines, but just an extended period of time where the market continues to go lower or higher without triggering the other side of the range, and it just keeps pulling in one direction. So this is an extended run where they keep breaking out to the low. Over here, triggers previous day's high. Now, I'm going to say this once, I'm going to say it twice, and I'll probably say it a third time, hopefully. Once they trigger the previous day's high, this could be an early warning sign of a reversal to come. Maybe not on that day, maybe not even the next day, but coming soon, there could be a reversal. Another warning sign is after one of these extended runs, or just moves in general. You'll notice these big climax moves that induces people or just kind of gets the final blow off into a level or into a low or into a high. And this is usually the end of a move. So we have multiple things kind of pointing towards that, but not necessarily saying, hey, for sure this is going to happen. But we'll get a little bit more into that here in a second. The big takeaways from an extended run and just from 3 days of breakouts in general is just because the market triggers one side of the range 3 days in a row does not mean that this is 100% guaranteed going to happen on the third or the fourth day. It can go much longer than that, 3, 4, 5, 6, 7, 8, 9. There's things that I'm looking for to help me identify that this is going to be a trade for today, or maybe for tomorrow, or even maybe for the day after. Some of those things can be break in structure. So structure, market structure, higher highs, lower lows. We're making lower lows and lower highs. So I would be looking for a higher high. The front side of a move being broken. We've been going down. We're in a trend down. The front side of the move breaks, and then we'll get a reversal coming off of that. Trap volume, volume being trapped down low or up high. This blow off move, like I said, the capitulation in this case, or the blow off in the upwards direction, can end or signal the end of a move. So let's go into a few examples. I've got a chart of the pound up here. This is a 1 hour chart. And then over here, you'll notice I've got a overlay of the 1 minute chart down here where this trade took place. What are some of the details? What are some of the characteristics? We're making lower lows and lower highs. We're breaking out to the downside, going lower, lower, and lower. Now, does that mean on the third day that there will absolutely be a trade? No, and there wasn't here on the third day. However, the third day can act potentially as a signal day for the next day. So on the third day of breakouts, they close down low, closes in breakout. All of that is fine and dandy. So if I were to draw a little line here, you might notice that the volume is trapped down low. We've come down. Actually, I could probably draw this like this. So if you were to draw this down like this is the retest of that low. They broke out here and they've come back down in 3 pushes to retest the low, gone into consolidation sideways after that third day of breakout. So that's just one detail, right? So the front side of the move may have been broken. Do I have a higher high? So on the day itself, that is usually where I'm going to be looking for my structure. I'm going to be looking down on those 1, 5, 15-minute charts to see on the day itself, do I have structure being broken, in this case to the upside, so that I can frame my trade and say, hey, this is a higher probability opportunity because we've stopped making lower lows and lower highs. The market is potentially overextended. We're on that third day, and it is now set up properly for a short squeeze. That's the big takeaway, the big characteristic that is super important to me is it is set up appropriately for a short squeeze. And a short squeeze to me is characterized as the market was making lower lows and lower highs, and it has now made a higher high and pulled back in 3 pushes and set up for that squeeze. Even here on the 1 hour chart, you can kind of tell they made this lower low here, and then it spiked back up and made a higher high, which is what you're seeing over here. So it's spiked up and made this higher high, and then you can tell just here on the 1 hour chart that we've pulled back once, twice, and a third time. Now, this is where timing is going to become the most important thing to me. On the day itself, looking for the entry, I've got my little 1 minute chart up here. They've made the higher high. They've pulled back 1, 2, and 3. New 15-minute bar opens up and then breaks out, pulls back, goes into consolidation, and then continues to break out higher. So this is the most ideal entry, obviously coming off the low after the third push. But there's plenty of times where I miss this entry, and I will be more than happy to take the late entry on the first pullback, which is obviously right here. All right, hopefully going to start seeing some common trends. Number 1, we have 3 days of breakouts. Now, this one had 2 days of breakouts, and on the third day was the trade. So 2 days of breakouts. On the third day, they triggered previous day's high, triggering in breakout traders up high, and then that market reversed, coming off of previous day's high to go back down towards previous day's low. Number 2, trend line. So if you have a front side of a move, they were going higher. That line has been broken. Do I put a lot of weight behind that? Not necessarily, but it is nice to see that the front side of a move has been broken, and maybe now we're ready to go to the back side of the move and begin the dump back in the other direction. So down here out on my entry time frame, this run down over here would be dictated over here, which was also the lower low on a higher time frame. So they make this lower low here, and then notice how it pulls back. Once they start to pop back up, very well defined, 1, 2, and then 3, and then the time of day kicks in, and it becomes the most important thing. Notice the pushes, push 1, push 2, push 3 to end the move. So we have level 1, level 2, level 3, ending in 1 push, 2 push, and 3 push. That often signals the end of a move, even down on the lower time frames, even on the higher time frames. So you have the 3 legs, push 3, and then the new hour opens up and then begins to break down. We already have the lower low, so I am green light to take the trade anywhere up here after I get my third push, and I can tell that, hey, it's starting to break back down. We're starting to make lower lows and lower highs. I'm allowed to now get in, especially after that new hour opens up. It should be ready to dump, and if it doesn't, there's probably something wrong. Something else to note is that, hey, this is the previous day's low down here. This is the low of the current day, so we've got a lot of space to get down there. The market might fall through that area very quickly, and if it does, then this is a fantastic trade, and if it doesn't and starts working the low of the day, hey, I need to get out of this thing because it could be reversing back up, and maybe we're going to continue to trend higher. The market is in breakout. It could only be pulling back to this breakout level here, and then maybe it's going to resume the trend. So that is definitely something to be taking note of and thinking about while you're going through these trades. Here is another example of an extended run that has now come to an end. Again, front side of a move, moving higher, breaking out to the upside, breakout 1, 2, 3, 4, and 5. And on the 5th day, it closes in breakout. And on the 6th day, they've triggered previous day's high. They've triggered previous day's low. They've broken down. They've made a lower low on the inside of the previous day's range and also triggered that previous day's low, which overall could be a much larger lower low. And then on the day itself, it starts to pull back. This is a 1 hour chart on gold. And just kind of look at the pullback. They've got this little leg up, and then it paused, and then it legs up again, and it paused, and it legs up again. And this is on a 1 hour chart. So down on the lower time frames, I want you to take note of the fact that this is all in a 1 bar range. This 1 bar here, they've sat in consolidation. This bar is an inside bar. And then we have this bar tagging the low of the previous bar, but this is all on the inside of this bar. If I were to project this line across here, project this line across here, that's all on the inside. So we got this big consolidation down low, and then they come out of this consolidation in this bit of a 1, 2, 3 pattern. Then you get your little descending triangle sort of pattern that breaks down right at the new hour. So we have the lower low and the pullback and 3 pushes, and then it breaks down at the new hour and goes vertical to the downside, back down to where that pump began. Hey, you made it this far in the video. Let me know down in the comments below what new thing you have learned in this video. This is another example of breakout traders being triggered into the market. Not necessarily closing in breakout every single day. Notice this first breakout day triggered longs in, but did not close outside of the range. That's no big deal. Those breakout traders are still triggered in, and they're not stopped out at the low of the day or the low of the previous day. So they're still in there. On breakout day 2, they do close outside of the range, and breakout day 3, the same thing. They are still in breakout. They've made this higher high over here on a lower time frame, and then broke down and made a lower low, which I have up here in the little overlay. This is a 5-minute chart, and notice how they break down. They make the lower low, and they pull back in 3 bars. And I keep going over this same exact criteria, lower low, 3 pushes, because this is part of my entry criteria in the way that I enter in every single trade. This is that long squeeze setup. The signal day would be 3 days of breakouts and a long squeeze setup coming off of the high of the week. So here's the lower low. The lower high is being formed. You get the engulfment proving to me that, hey, this is the lower high. I'm now green light to enter as long as it's the appropriate time of day. Hey, it's 9:30, perfect timing. I'm allowed to enter. And again, we have space from the low of the day back down to previous day's low in order for this trade to play out the rest of the way. And ultimately all the way back down to where that pump began, which came off of the low of. Small recap, everything we've gone over. What are the most important things? Hopefully you're screaming in your own brain. When there's a breakout day, I should be projecting that level across. Whenever I have 3 days of breakouts, I don't automatically assume that the trade is going to reverse, but I should be looking for the front side of the move to be broken, and also for either a higher high or a lower low to have been formed. Additionally, some characteristics or things that could help me identify that this trade is ready to do its thing is a capitulation move or a blow-off move to signal the end, and also the previous day's range may have been triggered. So for example, if the market's going down and they triggered previous day's high, that could have been a higher high and signaling that the market may be about to reverse. Now, we're going to go into some different specific variations of this 3 days, 3 sessions of breakout. This is actually one of my favorite trade setups, the 33 trade, which Steve Mauro talks about quite a bit, and also Stacey Burke. The 3 sessions of breakouts outside of a previous day's range after like 3 or 4 weeks of breakout. Those are playbook setups for me, and we're about to get into those right meow. So 3 days, 3 sessions of breakout. 3 sessions of breakout could have occurred on the previous day. I want to make that very clear. It does not necessarily have to have 3 sessions of breakout in the current day. Now, those 3 sessions of breakout could also indicate a very strong trend, so the context of the market is going to be very important. And the day over here is going to be very important to ensure that the day is setting up correctly at the correct time of day. All right, so I want to be in my session. I want to be soon after that lower low has been formed. 9:30 opens up, new hour opens up, something like that. In my session, ready to go over here. So let's take a look at this. Number 1, we've been breaking out to the upside. We've got 3 sessions of breakout. What does that actually mean? It means that Asia, London, and New York were all on the outside of the previous day's high. Additionally, there has been no retest of the previous day's high. There was no breakout and pullback of that previous day's level. Why is that important to me? Think back in the slideshow, I talked about breakout traders being stopped out at those levels. So that means that these people are still in profit. They have still not been stopped out yet. So this is where I usually will draw my space. There's going to be a base. That's the high or low put in just above the previous day's high or low, depending on direction, and then the space to get back down there. Additionally, we have structure. We have higher highs and higher lows being formed. And then there's this lower low that is formed over here on Friday. So I've got my 3 sessions of breakout, 3 days of breakout, a lower low being formed on the following day, 3 pushes. So we get the lower low, and then leg 1 goes back up, goes into consolidation. Leg 2 up, pulls back, goes into consolidation. Leg 3 up, goes into consolidation, push 1, push 2, a weak push 3, and we start to break down. Now, this also creates a second lower low in that first pullback. So we get the lower low, first pullback, and then now this allows me to enter in after the 3 pushes and also at a certain time of day. Now, usually this is going to be targeting that previous day's high as my first target, and they don't quite get there on this day specifically, but on the following day, it's not shown here, but they do get back down to that level. All right, so I'm going to go over here. I'm going to read directly off of this now a little bit. Clean breakout, no retest. That's what I'm referring to over here. Base, that higher low or lower high, depending on direction. In this case, we're going up, so this is the lower, or excuse me, the higher low, an area where the market can fall through very quickly. Space, that's that space that the market can fall through. And then ramped volume. Now, there wasn't a whole lot of ramped volume over here. I would say that maybe this leg up was the best one, but I do have better examples of ramped volume. So I don't have it listed here, but I will show you soon. So soon, in fact, that I'm going to show it to you right now. So this is an example of it's actually from my playbook directly. One of the note cards that I have listed in there, and I've highlighted the scenario that is currently being shown, which helps me very, very much when I'm trading day to day. So number 1, there's a breakout. We have 3 weeks of breakouts in one direction. This breakout occurred on a Thursday, and then on Friday, notice how the breakout occurs in Asia. So we have Asia outside of the range, no retest of the previous day's high, and then now we have a nice clean 3 peaks pattern, 1 peak, 2 peak, 3 peaks. Asia, London, and New York are all on the outside. And this is that ramped volume. They're ramping it up over here, creating nice, clean chart patterns to take you back up into the high or dragging you up into the high of the day and high of the week and things like that. And then notice how it breaks out. Breakout, bar 1, pause, breakout, bar 2, pause, breakout, bar 3, immediate reversal bar, engulfment, lower time frame, looking for an entry. Now, this is a 15-minute chart. So like I said, getting down on that lower time frame and looking for that entry. However, this is just another great example of a good playbook opportunity where there's the breakout, no retest. We've got the 3 weeks of breakouts, 3 sessions of breakout outside of the previous day's range, and it is on a Friday, which is even better. So I told you earlier in the video that I was listing off certain details because those are my entry criteria details. So let's go through those again. We're going to look at the entry criteria. You know, I've got the 3 days of breakouts. The day I think is looking okay, but what am I actually looking for on the day for this to make sense for me to actually enter? And where should I be putting my stops? And where should I be targeting? So I've got my 3 days of breakouts listed over here. Hey, yesterday was 3 days of breakouts. Maybe tomorrow I'll get a trade, but I don't know until that day actually sets up. So on the day itself, we get the lower low. Now that is the first step on the day that I say, hey, this is setting up properly, or it could be setting up properly. Let's look for the follow-on steps. The next step after that lower low is formed is the 3 push pattern. So I get a 3 push pattern over here. Okay, step 2 is complete. Hey, but I don't know for sure that this is going to be a 3 push pattern until I get my engulfing candle. I know, beautiful spelling. Engulfing candle, step 3. Now, after step 3, I like to enter a few different ways. Number 1, I might go down to a lower time frame and try and catch the wick on a 1-minute chart or something along those lines. Or maybe I've got in on a 1-minute chart up high or a bit higher because this is a 5-minute chart. I will just put a 1 bar or a stop, you know, a sell stop 1 tick below this bar and allow the market to fall through it and trigger me in. And then I'll just put my stop above that recent swing high. As far as targets go, always targeting the other side of the range. That could be the low of the current day. Let's say that I take this trade from up here. My first target could be the low of the current day. But ultimately, I want to target the other side of the range because remember what I talked about earlier in the video about The reason that these trades work so well is because there's so much order flow built up at the other side of the previous day's levels that is why these move very quickly back to those areas, because it's going back for the money. Some considerations, again, just to reiterate, am I still on the front side of the move, or has that been broken already and structured? Have I had my lower low or my higher high yet? So that covers the criteria for me to actually enter the trade. And actually, we're going to go into just a little bit more about the details of 3 days of breakouts specifically. 3 days of breakouts, or 3 days of longs or shorts being triggered into the market. Specifically, something that I do or look for, and a question I get quite a bit about resets of the count. When do you reset the count for the 3 days of breakouts? Specifically, going to reset the count whenever the other side of the range gets stopped out. So for example, if I've got 2 days of breakouts in the market and they go back to the other side of the range, they trigger previous day's low. Okay, well, they've probably just stopped out the breakout traders that were long. So I need to restart the count now. In this case, this went to breakout day 1 to the downside. But if they were to, let's say, for example, continue to go higher, I'm going to restart that count to breakout day 1 and go from there. And last but not least, some recent examples, because these setups show up almost every single week on at least some kind of pair. If you trade only currencies, you have a lot more options, and there will probably be one every single week. If you only trade indexes, you might have fewer, commodities, gold, things like that. You might have fewer of these trades just because you trade less pairs. But if you're trading a wide range of instruments, indexes, gold, oil, and currencies, you're going to find one of these probably every single week. So let's take a look at some recent examples. This was from January 6th. The other example we'll be looking at is the NASDAQ from January 2nd. And today is currently January 11th as I record this video. So recent example number 1, oil. We had the front side of a move, and we already have our 3 days of breakouts, 4 days of breakouts. We've been going higher, up and away. And then on the 5th day, they have now triggered previous day's high again. So I need to wait. Do I have my lower low or lower high yet? What time is it? And things like that. Now, in this case, this was a triggering of the previous day's high. They came out of the high of the day in a 1, 2, 3 and engulfed. For those of you who are watching this video that might be maybe a bit more experienced, you would know that this could be a great trade, even just to get back down to previous day's high. But for those of you who really want to wait for the full entry criteria to play out, wait for that lower low. In this instance, they made this lower low a little bit later after the session, and I would have had to wait until the afternoon session to actually execute this trade. Regardless, though, still a great trade, and all of the criteria was met over here after that lower low was formed, lower time frame, getting in on the engulfment or the breakout continuation back down towards the front side of the move, trend, or even previous day's low. And then finally, the NASDAQ example looking at, we're going to get this fixed. All right, and then similar NASDAQ, you have the 4 days of breakouts in a direction going down. In this case, this was a downtrend, 4 days of breakouts down. And then on that 5th day, so 4 days being kind of the signal, you start to get higher highs and higher lows, and the time of day was beautiful. It was perfect. Higher high, the dump back down into the low of the day. And then the breakout, higher high, 3 pushes back down. Timing kicks in. You get your little pen hammer and engulfment. Parabolic channel, if you don't feel comfortable, this would be considered the first pullback. The parabolic channel, anywhere in here is okay for me to enter. Prefer to wait until they come stop hunt outside of the bottom of the channel. And then I tried to get it on the rip back up into the channel. And as it's going vertical, this was a pretty decent move, over 130 pips, even just in these little itty bitty 3 bars back up to the high. Surely, if you've made it this far, you've learned at least one thing. So do me a huge favor, hit that like button down below, and I will see you all in the next one. Bye-bye.